definitely required. But we'll do it next time.
Okay, yeah, that works for me. So I guess so with this trade, this was just based on the entry signal
Man,
number three,
that's a great
retracement.
one. Draw that zone for me.
Okay, yeah. So it was just this zone here.
Well, the supply demand zone.
Okay, got it.
Forget the fib. You can. I see the. I know the range. I see. Leave the fib, but just draw. Ignore the fib and just draw the supply zone
okay, got it.
to the left, if
Yeah,
there is any.
yes. This is the supply zone that I used here. Uh,
Well, did you see my recent post?
I believe so. There's been quite a few, but which one in particular?
In particular, never draw a sell zone using a bullish pin bar, and never draw a buy zone or a demand zone using a bearish pin bar. That is a bullish pin bar,
Yeah.
bullish, and you're using it as a sell zone, a supply zone. We don't do that stuff.
Okay. Got it. Got
That's
it.
just uh, not accurate stuff for
Okay.
you. But there's there's other candles there, but not that one. So try again.
Okay. So, uh, I guess I could use this one here.
Well, don't you want a candle within your range?
Yeah. Yes.
What is that? Is that's the red is your 50, right?
Yeah. Yeah. So that's outside the range. Yeah. Got it. So are you saying I guess I would use this candle here?
Well, remember, there's two retracement ranges: the 50 to 61 and the 61 to 78.
Yeah.
Draw the okay, so that could be a zone within your 50 to 61. Now,
Yeah.
we don't know what the hell is going to happen right now in the future, but draw a zone for the 61 to 78.
Got it. Got it. Okay. Yeah. So that would just be here.
Great. Now, all the way extend. That's
Yep.
actually what I would use as well. Now, what did I say about uh, these two levels? We
Um.
have a bottom one and the top, but
Yeah.
is it the 50 to 61? Is that more commonly hit? And if it goes deep into the 61 to 78 box, then it's called the overextension.
Yep. Yes.
All right.
Yes.
So always want to keep that in mind. But uh, tell me what happened here.
Yeah. So just had those zones along with for my 50 to 61 and 61 to 78, and saw this footprint here on this candle, and
Great.
went down on my 15-minute, and let's see if I could identify exactly which candle.
This
Uh,
works out real nicely for you.
yeah, it definitely did.
Now, is this Fibonacci level or range?
Mhm.
Is that a zone? No, this fib level, is that a zone?
Uh,
Like a supply or demand buy and sell zone?
no, I wouldn't say that.
No.
Yeah.
Exactly. No, it's not. It's actually different. This is a fib range. This is not some supply demand zone. So
Yeah.
if it does go above the 61.8, like, then you got to understand that this is a fib range, not a zone, but the gray is the zone. And we saw, but in this case, it did go out of it a little. But what happened when it popped out of the zone?
When it
Every
popped.
single time it popped out of the zone, what happened?
Okay. Yeah. It got sold right back into the
Well,
zone.
sometimes it's good to do this. Just get an arrow,
Mm.
and from top to bottom, let's expand it a little. From high to the low. Remember, this is where somebody, well, we know who, clicked sell, and it was pushed down this distance,
Mm-hmm.
and it was pushed down here, pushed down there, and then another one there, and then another one there. What are you noticing about all these?
Yeah. They're the slight rallies are getting sold off.
Well, all these purple arrows are breaking previous structure or someone similar to it, where it's
Mm-hmm.
kind of footprints, especially here.
Yeah. Okay. Okay. Got it.
This is like three in a row, and then it kind of, maybe you can call this that final liquidity, which is above maybe the most recent area.
Mm-hmm.
Can't use this computer again, but you could just draw a box above the most recent highs, and it kind of ticks right above them, and then that's when there's that final collapse. We always see, usually, I don't want to say always, but we usually see before that final collapse, it just blows it all out, and then it drops. It just
Mm-hmm.
breaks everything, and then because that's when the buying is the most, and that's when they can sell the most on the opposite side.
Okay.
But where'd you get in on this one?
Yeah. So I believe on this one.
Notice that there's notice how there's multiple entries here, multiple areas to get in, multiple opportunities that the market presented to get in,
Yeah.
right?
Yep. Yeah. I believe it was maybe still a bit late, but it was on
Maybe use
this.
the arrow.
Okay. Yeah. I want to
Late
say.
is better than early, as they say.
Okay. Yeah. Yeah. On this. I believe this 4 o'clock 15-minute candle right here is where I entered.
This little reaching pin bar.
Yeah, that reaching pin bar there. After it broke, a lot of those lows, is where I got in.
If it was me, right after I see this pin bar, I say, all right, multiple previous lows broken. And it's right in the middle. I'm going to say reaching. And then as soon as this red one fills it, I got to say that it's going to be very hard for me not to click sell right there.
Yeah.
Right now, maybe the stop is above there.
Mm-hmm.
Okay. And, maybe here I'm break even because I had another footprint. Remember, we like to go break even after a footprint,
Okay. Yeah.
and a good one. And it's a great time to go break even when you get a footprint like this that leaves the zone. This is a great time to go break even. And how'd you set your target on this one? Let's tell me
Yeah.
where you set the target
Yeah.
and why.
So went on my 4 hour. And so my first target was 92 was 0.9200. Just based on kind of
For
where.
the level.
Okay, yeah. Um, so yeah, my first target was at this area here, just based on what price had previously had done, as is acting as resistance here.
Okay, so let's just put the arrow here. We have to know what you extracted, but so we can say that you took this here.
Yes,
Is that, would you say, accurate?
yes.
All right. Now I need you. Now are you still? So you closed 100% here.
No, I didn't. I closed half there. I let the rest run, and then I also took another position after that, reaching pin bar next to it that broke all of those
This
lows.
is okay. Great. So you did multiple entries on this, but let's say this. All your, especially this initial one. You still have some of it running.
So I just closed it like earlier today, just because it was the end of the week.
Okay. So all right. So you closed. So you're 100% out now.
Yeah.
This I'm gonna label all the targets. You actually took the first target. That's great. And I don't know how many pips did you? Let's just see. 260, 200. All right. Well, we got to upgrade this, and I'm gonna show you what I would have done.
Okay.
Okay. I'm gonna label all the targets for you.
Okay.
Okay. The first one is the closest one. You're absolutely right. Okay. That's great that you set it there. I don't want you setting it anything closer than that one. Okay, but
Yeah.
there is target one. Number two. Okay, I'm going to label all of them. Okay, we're going to say maybe number three, and somewhere here, number four, and we have, a home run is this one. This
Okay.
is number five, and it could definitely go there, man. Absolutely, you can make home run trades, but I want you to make sure that you have a system for where you don't close everything right here
Got it.
at the first closest one, because it's not going to hurt if you leave just a little. This is not going to really bother you that you're still making money off of it, even if it's a little piece.
Yeah.
Okay, because what if it goes to zero? You're not prepared for that. Okay, so you always just leave a little half run, but you have one, two, three, you have four other targets that, and it looks like it may hit it. Who the hell knows? But maybe close half right there and let the other half run to here, or let the other half run to here, or close maybe, or maybe trail your stop as if it goes down, or maybe close 80% and then let the other 20% run to the final far target. Maybe it's a HPT, it's with the trend, blah, blah. You get the point.
Yeah.
You get,
Okay.
and I know this is hard. This is hard, man, because I know, well, we'll cover in psychology, but this, I know it makes it hard, that rally up and this rally up. I get it. Okay. Maybe you're thinking, oh, it's wiping my profit, but yeah, it's going to retrace back and it's going to have another footprint like we see here.
Okay.
And it retraces back not as high as the previous one, and then maybe another footprint where it breaks this low, right, with another footprint. So absolutely possible. So let's make sure we're positioned for that, because you're not positioned if it were to go to zero. All right, I'm telling you, even if you left 0.01 running, okay, it's still gonna feel good. All right, so, you know, because eventually you're gonna have more than 0.01. You're gonna be running 10 lots, 50, 100. You're just gonna let it run. All right, and that's when you make the big bucks.
Yeah.
But you definitely want to get that habit of just leaving it, man, and go as small as you have to, just to allow yourself to do it. Maybe 0.01, man. Everybody can let 0.01 run, so let 0.01 run.
Yeah.
Okay, but you know, up to you what you want to let run. But I definitely recommend you leave some on to run. I'll look at 1, 2, 3, 4 other potential targets. Maybe it never touches them, but usually, or not usually, well, I mean, who knows when your home runs come, but maybe it drops and reaches here. Who the hell knows? But if you close everything, subconsciously, you're assuming that it's not going to come here.
Right. Yeah.
You know, it's not going to go. And, you know, I want you to really make your money. And, you know, you have any questions on this? Hopefully we can do psychology next time.
Yeah.
And then after that, do position pyramiding, because I like to do that one-on-one with people.
Okay.
This
I
powerful
did have
stuff, man.
one
If you
question.
can do this, and then
So just I was looking at
it
like
seems when 1 second,
yeah.
when you added that one at the reaching pin bar,
Hmm.
the initial was break even?
Yes, I had moved the initial to break even.
All right, so you know you got the idea of pyramiding a position.
Okay.
Add, but you know, never increase your risk. You know, pyramid it, but never increase your risk. You can add to your position. You can squeeze your winners out, take advantage. If it's going down, might as well. But you know, always keep that risk either constant or less. All right, that's great.